How's it going, gang? It's Mikey Millions here, and we are about to get into episode 7 of the Robinhood 3K Challenge. I know it took me a little while to get this video out, and that is because my daughter was born last week. This is little Becky Millions, and she takes up most of my time right now. Therefore, I offer no one any apologies for this video being late. We're just gonna drive on. Just to do a quick recap of the challenge so far, we began the challenge with $3,000. Over the past 6 episodes, we've now traded 8 times and collected gains of $279.44, or 9.3%. I was shooting for 2% gains per episode, which would put us at a little over 12% gain so far, so obviously I'm underperforming my goal by a little bit. But that's okay, because a 2% gain consistently is a pretty lofty goal. My aim this episode is to finally break that $3,300 barrier and hit 10% gains. Here's how we're gonna do it. In episode 5, Icy Road Trip nominated ServiceNow for my episode 7 trade, and somehow he won with 16 votes, so congratulations to Icy Road Trip. In this episode, we're going to trade ServiceNow. It's November 26th, and time to make some turkey money, so let's kick off. I had no idea what ServiceNow actually was, so I watched their company video and read their history, and after about 20 minutes, I still don't know what they do. They transform old manual ways of working into modern digital workflows, whatever the hell that means. I think they do cloud computing, but I do know they also have the whitest person ever on their homepage. Anyway, I don't really care about the company, I just care about their stock, so we need technical analysis. And because like 7 people ask every episode, this website is called stockcharts.com. You can put any ticker and you'll get a chart like this. Again, stockcharts.com. It's free. Unfortunately, the technicals on Now are not giving me the signs I like. I don't have enough decisive information here to trade on. Normally I would just stay away from a chart like this, but Icy Road Trip won the vote, and I am a man of my word, so let's do this. The first thing to note is the big jump here in mid-November on news that Now will join the S&P 500. That feels like something that should sell off right away, but it's been a week, and that hasn't really happened. The RSI did bounce off overbought territory, but has since gone completely flat at around 66, so it's really not a clear signal. The candlesticks are showing spinning tops, which indicates that neither buyers nor sellers have the upper hand. On the moving averages, this death cross is completely invalidated by this news spike, so I can't do much with that. Volume is also all out of whack because of this massive spike, so I can't really tell what's going on. A bullish MACD crossover did take place a while ago before the news run up, so the signal is kind of stale and looks like it might reverse soon, so that's slightly bearish. And finally, the MACD histogram indicates that buying pressure is starting to abate, but it's not quite a strong signal yet. We do have this gap here around 265 that will probably get filled eventually, so that's bearish if you believe in astrology. That's a lot of technical indicators to run through, and frankly, I'm not getting a good read on any of them. I think Now is slightly more likely to go down than up in the short term just because of this gap, but nothing is really standing out as a strong directional indicator. I'm going to put a 5 out of 10 on this stock staying above 270 through mid-December, because 5 out of 10 is a good rating when you just don't know. So, I'm going to do the thing that everyone does when they have no idea what to do. I'm going to use a nice wide Iron Condor. Now, I know I haven't given you a video on using an Iron Condor yet, but I promise it's coming. Essentially, Iron Condors are a neutral strategy that you can use when you think a stock will stay stable, but you also want to limit your risk. You can look at an Iron Condor as a call credit spread and a put credit spread at the same time, or you can look at it as a strangle with long contracts on either end for insurance. Both are accurate. So let's go ahead and open the Now options chain. I'm going to roll the expiration to December 13th. And we will start establishing our Iron Condor by selling an out of the money call. And of course, since I don't know which direction this is going to go, I'm going to trade a strike well out of the money. Let's go about $10 out of the money and sell the 290 call for $240 premium. Now since the stock is so expensive, the strikes are $2.50 apart, so we will have to buy the 292.50 call for $185 premium in order to limit our risk. You might notice that this is a call credit spread so far, so our max profit would be $55 and our max loss $195 if we ended here. But to make an Iron Condor, we need to work the put side as well. So let's go $10 out of the money, just like we did on the call side, and sell the 270 put for $258 premium. Then we will buy the 267.50 put for $203 premium. This will limit our risk if the stock plummets. Our fill ended up being $105 instead of the proposed $110 because you've got to give Robinhood a little cut before they'll fill your order. So on this Iron Condor overall, our max gain is $105 and our max loss is $145. We will take our max gain if now closes between 270 and 290 on December 13th, and we will suffer our max loss if now goes above 292.50 or below 267.50. I think we are slightly more likely to close closer to the 270 mark just because of this gap, but this Condor is pretty wide, so I'm feeling alright about it. Let's give this Condor some time to work and check back in later. So here we are on December 5th. It's been a week and a half, and the technicals are starting to become clear. The RSI is drifting off that overbought level after all, so that's bearish. The candlesticks aren't super bearish, but we do have a failed recovery. We've tested the 272 level a few times, and that gap at 265 is in the crosshairs. The moving averages and volumes still aren't giving me much, but the MACD is really telling. The signal line is about to cross downward across the MACD line, which is a strong bearish signal, and the histogram confirms that selling pressure is strengthening. It looks like the market really does want to close this gap at 265, so I'm putting an 8 out of 10 on now drifting back to the 265 level over the next few days. It might even go lower and bounce off the 200-day moving average at about 262. There's no telling what will happen after that gap closes, but a drop to 265 over the next week looks likely, and this does not bode well for my Iron Condor. Anything below 267.50 will put me in my max loss range, and I am not down with that. Nothing is a sure bet in the market, but when it comes to now holding above 270 by the December 13th expiration date, I'm just not seeing it. The signals are too bearish, but fortunately I'm still in a profitable range on this trade, so we are going to close out before the nerds at ServiceNow beat me down in the parking lot. Let's close our Iron Condor while we still have a small profit. Let's close for $95 premium to grab a $10 profit overall, and let's submit our order. And you guys already know how this goes, so I'm not even going to front. We get filled at $100 instead, so we walk out of this trade with a $5 profit. Not exactly enjoyable or exciting, but $5 is enough for about 2 gallons of gasoline in my neighborhood, so it's something. Even though the stock moved down exactly $7.50 from when we opened the position, we still profited. That's a pretty cool feature of the Iron Condor. As far as our goal of reaching $3,300, the now trade didn't really move the needle. But remember a few weeks ago when I used premium to buy shares? Those shares went up substantially this week, especially AMD, which is just a monster. And due to those gains, we were actually able to reach our goal and hit 10% overall. Ultimately, I'm still happy with how this episode turned out. What I'm about to do now is not healthy, so you shouldn't do it or you'll drive yourself crazy. When you close a trade, don't keep checking to see what would have happened if you didn't close. But for purposes of this video, let's check in with now a few more times to see what would have happened if I kept the Condor open, for educational purposes only. So through December 12th, I was pretty close, now drifted down to just above 265, which is about 1% below our long put, and we would have been looking at a $145 loss if the contract expired right there. Selling at a $5 profit was looking awfully good right then. Avoiding big losses is part of the game. But look what happened on expiration day. On December 13th, with the gap filled, now rocketed up $7 to over $273. That's back into my max gain range. If I had held through expiration, this huge move would have swung me from a $145 loss to a $105 gain, a 2.6% stock gain overnight. I'm convinced this happened explicitly to piss me off, but I can't get too mad because there's no way to tell this would have happened. Even if you expected a bounce after the gap filled, there's no way to predict that it would have happened specifically on December 13th, or that it would have been a $7 increase. If I had held onto the Iron Condor and made money, it would have been more dumb luck than trading expertise. So while I am upset with how this turned out, I think closing on December 5th at a profit was still the intelligent move, and I stand by it. However, I don't want anyone thinking I have weak hands, so I'm going to square up with Dagoth in Elder Scrolls Morrowind using only hand-to-hand. So let's whoop his ass to prove we have iron hands.
Dagoth welcomes you, Nerevar,
Sixth
my old
house
friend.
eat shit. NWA's rule the day. Iron hands, baby. Don't fuck with Theta Gang or House Telvanni. You guys know the drill. Comment the stock you want to see me trade, and I'll put a strategy together for episode 9. Make sure to upvote the stock that you like, and I'll trade whichever is the most popular. However, I reserve the right to reject the highest vote if it's something stupid like Litecoin. For episode 8 next week, I'm apparently supposed to trade Activision Blizzard, which actually got a ton of votes, so I need to go in. You won't want to miss it. Well, that's it, folks. I hope this trade taught you something, even though the trade didn't have the most exciting conclusion. Next episode, we're going to go hard into Activision Blizzard. Don't forget to like and subscribe, and I'll catch you next time. Thanks for watching.